housing slump. Fears spread to Wall Street. Consumers tightened their purse strings.
The U.S. Federal Reserve cut its key interest rate by 0.5 point.
The I word, inflation, is coming to the
Major
fore.
developments on the lending crisis in the U.S. Oil and gold prices are spiking.
Nuclear strike here on our financial market.
And it's complicated because of where we are in the election cycle.
Huge disconnect between Wall Street and Main Street.
Hey everyone, did you know the U.S. national debt is over $34 trillion? That's a jaw-dropping number, and it's only getting bigger. So, what does this mean for our economy and for you as a taxpayer? In today's video, we'll explore how this debt came to be, and most importantly, how it could potentially end. Whether you're a student, a worker, or a retiree, this issue affects you. Let's dive right in. Understanding the U.S. national debt. First things first, what is the national debt? It's the total amount of money the federal government owes to creditors. This includes public debt, which is what the government borrows, and intragovernmental debt, which is money owed to various government agencies. But how did we get to such a massive number? Over the years, several factors have contributed to this rising debt. Military spending, tax cuts, and big spending on social programs. Plus, the recent pandemic meant we needed a lot of financial support measures. But understanding why the debt exists is just the beginning. Now let's explore ways to reduce this overwhelming debt. Economic growth. One of the most effective ways to reduce national debt is through economic growth. When the economy grows, businesses expand, and more people get jobs. More jobs mean more people paying taxes, which helps pay down that debt. Think of it like this. If more people are working and paying income taxes, it's like having more people chip in to pay off a huge bill. Simple, right? This boost in revenue could help tackle the national debt effectively. Austerity measures. This means cutting back on government spending. We're talking about reducing budgets for programs like education, healthcare, and public services. While this can help lower the debt, it's not a popular choice. Cutting essential services can be a tough pill to swallow, especially for those who rely on them the most. It's like trying to save money by cutting your own lunch. Not very appealing. Inflation. Now let's talk about inflation. This is when prices for goods and services go up over time. If inflation rises, the value of money goes down. So, if the government owes a fixed amount, inflation can make it easier to repay because future money is worth less. But here's the catch. Too much inflation can lead to economic chaos. It's like adding a little spice to your food. A little is good, but too much can ruin the dish. Debt restructuring is another option. This means changing the terms of the debt. It could be extending repayment periods, lowering interest rates, or negotiating with creditors to forgive part of the debt. Think of it like refinancing your mortgage to get better terms. It can provide immediate relief but might hurt the country's credit rating. It's a bit like asking your bank for a favor. They might help, but they'll also keep an eye on you. Default. Finally, there's the option of default. This means the country stops paying back its debts. Sounds drastic, right? That's because it is. Defaulting can lead to higher borrowing costs, a drop in the country's credit rating, and loss of trust from international investors. It's like skipping out on a credit card bill, not something you want to do unless absolutely necessary. It's a last resort option with big consequences. Future outlook. So, what does the future hold for the U.S. national debt? It's complicated. We're facing challenges like an aging population and rising healthcare costs, which could add to the debt. But there's hope. Advancements in technology and changes in public policy could spur economic growth. If managed wisely, these factors can help turn the tide. However, there's no one-size-fits-all solution. It will require careful consideration and cooperation from both political leaders and citizens. Well, let's do the conclusion of our topic now. To wrap things up, the U.S. national debt is a significant issue that affects all of us. The consequences can be serious, but there are multiple solutions on the table. Economic growth, austerity measures, inflation, debt restructuring, and even the option of default are all potential pathways. While the future remains uncertain, understanding these issues is the first step toward finding a solution. What do you think is the best way to tackle the national debt? Share your thoughts in the comments below. Don't forget to like and subscribe Alphapips for more content on important economic and finance topics. Thanks for watching.